Starbucks falling, now down 11% after missing on the top and bottom lines, reporting a surprise decline in global same-store sales. Joining us now is Kevin McCarthy, portfolio manager at Neuberger Berman. Kevin, it's great to have you on. You don't actually hold shares of Starbucks, but I am curious to get your thoughts on this, because on a day where we heard more commentary about cracks in the consumer, specifically the low-income consumer, with McDonald's this morning, with Coca-Cola this morning, just the latest to comment on that, the higher-end consumer has held in pretty well. And Starbucks historically has been more in the Chipotle camp than the McDonald's camp. So the fact that we saw same-store sales fall in North America, but also globally, including other key markets like China, what's the read-through?
You know, I think, Morgan, thank you. The read-through is that we are seeing pressure across the complex geographically and by demographic income cohorts. I think McDonald's even recognized this morning or noted that they are seeing that a similar pressure across the board. The miss, though, however, for Starbucks is quite significant. You know, I think at this point, a guidance reset is certainly in play. You know, that we're looking for 15 to 20% growth. Coming into this print, I was thinking a 10%, lowered it to a 10% EPS would be sufficient. To be honest now, I don't even know if a plus mid-single digit, which would put the stock at, you know, the EPS at around 370 for fiscal 24 is sufficient, because that in itself, you know, would assume or underwrite expectations for double-digit EPS growth in the second half, and you'd need to have positive comps and positive margins. So, you know, as it relates to the consumer, I think, you know, one of the messages that we're hearing and the takeaway from the first quarter is that we all knew that pricing was going to be rolling off coming into the year, that it was going to be a challenge to get traffic, and that the kind of the digital pinpointing and trying to target consumers on this with their digital apps was a hope. And now I think we're seeing that that hope is not coming through, and that more likely than not, we're going to see more aggressive value wars over the summer across the restaurant complex.
Yeah, we've already started to see it within the consumer staples space, the pushback from consumers on all of the price hikes and price increases. I mean, when you talk about a $6 or $7 fancy coffee, are we starting to see it here now as well?
For sure. I mean, they highlighted last quarter that one of their weaker periods or one of their weaker day parts was the afternoon, which is you're less frequent. It's more of a discretionary purchase. And so that is a challenge for them. But beyond that, you know, I think the challenge, you know, and I can kind of compare McDonald's and Starbucks because they both had a similar setup. They're both tracking from a traffic perspective below average, and they're below their long-term algo. But it's easier to diagnose McDonald's. McDonald's, you know, they can put out national value, and you think that's going to be, price is going to cut it. For Starbucks, the challenges are you don't really know how to model, because you're not sure if is it a social issue? Is it a cannibalization issue? Is it a cold beverage mix, which they've now got a lot of, or is it competition?
Well, here's what I wonder about, Kevin. I'm looking at comparable transactions in North America and U.S., down 7%, but average ticket actually up 4%. So it makes me wonder, are they a victim of trade down, where maybe a certain segment of the population, maybe higher end, is still going to them and spending, but then a whole cohort has just kind of said, oh, well, I'm going to save on coffee and not do that and maybe make it at home?
That's absolutely could be the case. And I mean, we're seeing some consumer balking in the afternoon day part, probably on what you're alluding to. But, you know, if you look at some of the international regions, internationally, not only do they have, in the U.S., the price is positive and traffic is negative. But if you look at it internationally, they're both negative. So I think, you know, for investors trying to pencil out how to model the second half of this year, you know, you really don't have a lot of certainty that even if you do cut prices, which is obviously going to take a hit on the top line and on margins, that's going to drive traffic, and that's going to be, you know, a source of upside for you in that case. And we haven't even gotten to China, which is another piece in of itself, which I think the underlying story there is just that, you know, the possibility of that being an upside driver is probably pretty limited given what you've seen from a competitive dynamic there.